Hi, you guys. Welcome back to the channel. Hope you guys had a wonderful weekend. In today's video, I am going to be sharing with you guys a 5 minute range breakout strategy. Okay, this is one of the most lucrative strategies. Great way to scalp the market, get in, get out in time. Yeah, I hope you guys enjoyed this video. Let's get into it. Okay, so the first thing we're gonna do, let me just go here into kill zones. Let me just switch this off first. So when you open up your market, you guys, it will look like this, right? The markets look like this. This is GBP USD. You guys already know it. I trade GBP USD most of the time. Well, let's say only. Okay, let's just keep it at that. I trade GBP USD only. Yes, I do look at other pairs, but my most favorite pair is the GBP USD. Okay, so when I get into the market, I go into my 5 minute. You don't need to go to the higher time frame or the lower time frame for this strategy. This one is a breakout open range strategy. So when the market is about to open, that's where you actually put your trades. You put importance on the market open. Okay. So what you're gonna need for that, you are going to need an indicator. The indicator is called a kill zone. So you're gonna go to your indicators and you're gonna click on kill. You're gonna type kill zone. You guys, as you can see here, you're gonna look for kill zones by. Okay, so it hid my favorite now. Okay, let's go to favorites. You're gonna look for kill zones by Oscar VS. So this kill zone right here is the one that you're going to look for. Oscar VS kill zone. That's what you're going to be using. Okay, now you're gonna switch on your kill zone. My kill zones are now on. Kill zones are just simply these lines right here. These lines right here determine the time zones. So once you are in your New York session, your London session, or your Tokyo session, okay. So those three are definitely separated here. What we are going to place importance on, because we are trading the GBP USD, we're going to place importance on this yellow line, which is the London session. There's also this white line here, which is the New York session. So these are the only two that we are going to actually put more importance on than any other kill zone line. Okay. But most importantly, it is the yellow line because we are British. We're going to check for the London session. Okay, so now let's go a bit further back and just see how the market reacted when it comes to this. Okay, let's start here. Okay, you guys. So when you start analyzing this right here, it is very simple. What you are going to do, you are going to go to your Tokyo session. It's before the London session starts, right? So you're going to go to your Tokyo sessions, the red part here. You're going to draw your trend lines. I'm going to take this line right here, your support and resistance lines. You're going to go to the lowest, the swing low of the Tokyo session. You're going to draw a line across that. You're going to go to the highest point of the Tokyo session, which is this one here. You're going to draw a line over that. Okay. So what are we going to wait for? We are going to wait for a breakout of these two lines. Of these two lines here. It either breaks out or it breaks below. Okay. So during this London session, what happened here? We had a fake out. The market decided to break to the upside a little bit, but created a reversal candlestick right here, showing Then now it is about to go to the downside. It rejected a little bit here, had a bit of consolidation, and spiraled back in. So here we will hold our hands. This is where you hold your hands, you do not trade. You wait. If you didn't get in here and lose your money, then don't enter at all. Don't enter because it broke into it again. It could just be consolidation and just in and out, and not help you in any way. So wait until you have this breakout. Once you have this breakout, even though it's on this New York session, but it is based on your own rules. So once it breaks out of there, then you can put in a sell right here. So the sell that you would have put in would have given you some profits, which is not much, but it would have given you some profits. Okay? Would have given you a little bit of profit. You could have made a little bit of money right there with that trade. Okay? So fine. We're going to go to the next day. The next day we come back, open range market, right? Now we say, okay, here is another Tokyo session. It is the next day. We are putting in our lowest point. We say, okay, in this session right here, our lowest point is this one. Oh, okay, so we draw this line there. Can you see it's not even up there? It's not on the side, it's actually here. This is the lowest point. We want the highest point. This is our highest point. Okay, so we want a breakout on either of the sides. Voila, we had a breakout just immediately. London session opened up, which is very exciting. Very, very exciting to see this happen. We're like, okay, can we see a reversal candlestick? Are we pushing to the downside? Yes, we are. We covered the body of this green candlestick. We covered it up with this one. Didn't finish covering it up, but it does show that there is power to the downside. Now we can put in our trade, right? We either get in, we either get in from the breakout or we get in from this reversal candlestick, the retest. So either way, get in from either one of these, and then you put your stop loss up there or up here, and then you continue with the trade. This trade could have given you significant amount of money. So you see, yesterday we didn't make that much, but today let's just see how this one goes. So we place this one here on the reversal. Our stop loss, we're just going to make a tight stop loss from the reversal candlestick. I'm going to place that there. Look at the possible income that you could have made from this trade. Let's just place that there. You could have made a 1 is to, basically 1 is to 6. You could have made a 1 is to 6 just like that. So yesterday you made a 1 is to 1. Today now you're making a 1 is to 6 just by trading the open range breakout strategy. You're scalping your way in, you out of the market really quickly. You don't care about the rest of the day. You're done. You close your laptop, you close whatever that you were working on, you continue your day, you do whatever fun thing that you enjoy to do. Now let's look for another one so that you guys have a clear understanding of how this works. We wait for the next day. Every single day, same thing. It doesn't change. We wait for the next day. We're like, okay, this is my highest point. Whew, today my lowest point is very low. So my lowest point is about there. Now, the whole day you were holding your hands. You hold your hands from um your London session, you hold your hands from New York session. You're like, yo, today I didn't even get a trade. You didn't get a trade. And that's great. It saved you a lot of money and a lot of stress. Imagine trying to say, no, now it's the uptrend. No, now it's a downtrend. No, maybe this type. Aha. Guys, how much are you going to lose, honestly? So this saves you from a lot of hassle. Now you're going to delete all of those. You wait for the next day. The next day comes, you're like, okay, let's hope today goes well. You put your trending lines. Guys, there's so many ways to trade the market. As long as you understand one, stick to one and make money from that. You have your highest point, your lowest point. You wait for it to break out, okay? So it breaks out, it fakes you out. You're like, oof, I'm in. You try to make a little bit of one to one or whatnot, it takes you out. You lose the trade. Okay. Now, I'm sure this was a news day. Definitely a news day. What a big candle this is. Now this breaks out to the downside. Crazy. Okay. You don't rush. You do not rush and enter this trade with this big candle and put your stop loss very far. No, no, no. Wait for a retest. When you are trading big candles, guys, wait for a retest. When it moves with such speed, it is gonna bounce back. It's like a tennis ball. When a tennis ball, you throw a tennis ball on the floor very hard, it's gonna bounce back also very quickly. So try to wait. Don't rush and enter a trade just because it's moving very fast and you're like, I am about to miss this trade. Don't do that. Don't do that. Wait for a retest and then you'll place in your trade. Okay. So when you wait for a retest, wait also for a reversal candlestick. When you see this as a reversal candlestick, then you can put in your trade and say, okay, now I'm gonna put in my trade. My stop loss is gonna be around my trend line, maybe on top of it, of that reversal line. And then now you're getting a 1 is to 2, 2.6, which is really not bad. It is a good amount. You made more than 2 times of what you put in. That's great. So you take what the market can offer. You're not going to make a 1 is to 8, 1 is to 10, or 1 is to 5 all of the time. You take what the market is offering you for that moment. Okay, guys? Let's just check one last one and see how that one would have went. Oh, the last one is recent market one. Okay, okay. So we're gonna look for our highest point here. And we're going to look for our lowest points, which is here. So we can look for this one could have been a bit of a loss, or you could have maybe trailed your take profit as soon as it went a little bit down, but it could have been a loss for the day. Definite loss. But guys, yeah, in a nutshell, you guys saw that you could have got wins and losses. But the point is when you win, you're winning much more than when you lose. Proper risk to reward management is crucial. You guys need to know how to manage your funds very well. Don't risk what you cannot afford. Be consistent with how you risk your money. Don't risk $100 today, tomorrow risk $10 and have a winning trade, and then you had a losing trade on $100. It doesn't make sense. Okay, try to be as consistent as you can. If you risking $20, let it be $20 each and every single day, at least for a week. And then you'll know that, okay, if I lost 2 trades and I won 2 trades and I had a 1 is to 3 or 1 is to 5, you made money. But if you today, because you woke up like this, you say, okay, I'm gonna risk $50. And then tomorrow you wake up like this, you say, no, I'm gonna risk $5. You lose a lot of money by doing that. Please do not ever do that. Okay, you guys, that is it. I hope you guys enjoyed this video. This is how to trade an open range market. It can be very, 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 very profitable. I hope you guys do try to trade like this. It is very stressless. It's a very simple strategy also. Hope you guys enjoyed this video. See you guys on another one. Bye.